Russia may be on the verge of its first foreign debt default since the Soviets overthrew Nicholas II a century ago. In an interview, the chairman of the European Commission said Western sanctions shocked Russia's economy. Hundreds of major companies and thousands of experts leave Russia, and its GDP is expected to fall by 11%. Russia's default, she said, is a matter of time. The default is one of the clearest signals of the impact the sanctions imposed by the US and other countries are expected to have on the Russian economy. However, will it affect Russia's ability to wage war in Ukraine? The Russian government's total debt in dollars and euros is $40 billion, half of it held by foreign investors. The Russian government had a deadline of April 4 to pay about $650 million in interest and capital to the holders of the two bonds issued in dollars. If a country defaults on a foreign loan, international investors are usually unwilling or unable to lend it more money. Alternatively, they demand much higher interest rates. Whether due to higher interest rates or an inability to borrow, it forces the country to cut spending. Reducing public expenses weakens economic activity, increases unemployment, and slows economic growth. While some of these consequences, such as slower economic growth, are often temporary, other outcomes can haunt a country for years. Trade with other countries stays depressed for an average of 15 years after default, while complete exclusion from capital markets usually lasts a little more than 8 years. But its substantial oil and gas revenues, sometimes at a discount, could help offset the need for borrowing in the short term, especially if it continues to find willing buyers such as India and China. On the 14th of April 2022, Putin admitted that sanctions are disrupting exports and raising costs. The Russian government is struggling to avoid default. Weird as it sounds, Russia is probably concerned about its reputation, at least among bond investors. Research shows that countries that have defaulted on their debts or have poor credit ratings find it difficult to build up military capabilities and therefore are less willing to take up arms against other countries.